Hi, I'm Phil Grande at philsgang.com. You know, it's been 7 years now since Obama ordered his Fed chairman to lower the savings rate from 5% to less than 0.25%. With a false narrative, it would spur economic growth and jobs. Everyone would have an opportunity in this economy. That's what he said. But what it spurred was a front loading of the biggest fake, unsustainable stock market rally of 200%. That's what it spurred. Now, most people did not participate in that rally because people got out of their 401k in 2009 and they said, just get me out. I want nothing but fixed income. And they got killed because with low interest rates, fixed incomes get murdered. You got to know what you're doing. If you're going to really retire, you got to be associated with the stock market. That's why you come to philsgang.com. That's philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, sitting through the State of the Union speech ranks somewhere between a colonoscopy and a root canal, especially when you have to listen to this.
Anyone claiming that America's economy is in decline is peddling fiction.
He's the fiction. Join my gang, philsgang.com. Subscribe today. philsgang.com, where you get the truth.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. Everybody was asking me, how did I know to short forward when it was November? And it was when Aunt B was telling us everything was fine. Well, what people didn't know is Aunt B was lying to us because when she was raising the rates, machinery sales were down 5.6%, computers were down 8.7%, communication equipment sales down 21%. I took a look at our chart and I saw that institutions were pulling money out of Ford. So we said, let's short Ford. And we did that in November, on November 10th, because my charts told me there was a big sell signal, and we took advantage of it. And you know that stock Ford has now dropped 17%. That's the return my gang has now, 17%. Don't follow any of the jibber-jabber from CNBC or the Fed. Follow me, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Be sure to watch the Phil's Gang Show with Phil Grande, weekdays at 3 p.m. Eastern Standard Time on various devices like smartphones, tablets, your computer, and more. Get free access to the Phil's Gang Show right in your hands at home or on the go. Simply go to philsgang.com. That's philsgang.com and click on the Listen Live link. And we'll see you on the charts.
They just told us right away that we're going to house you, we're going to feed you, and every single one of his medical bills is just all taken care of.
Saber que el tratamiento es completamente gratis nos quita una preocupación de encima.
We have phenomenal research, outstanding clinical care, and the generosity of public, which allow us to treat patients regardless of what it takes. And that's what makes St. Jude so magical.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food, because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything's been taken care of.
We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
AMBA, and I've lost over 30K on it, but it had excellent earnings the last several quarters, and they make the cameras and drone equipment. I don't know why it's so weak these days.
It's so weak these days because you don't pay attention to what they make. You don't care about their earnings. The problem is the institutions are pulling their money out, and that's all you need to know, and that's what we identify in the chart, and that's why I become a Phil's Gang member.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. We're hitting a new year, and you should, at the same time, come in with a new attitude, a new philosophy that you're going to make money when the stock market goes down. That's right. This is the third bubble, and you don't think it's going to crash? The first bubble did. the .com, the second bubble, the housing and financial con. Why do you think the third bubble, which is twice as big as the two previous bubbles, is any different? It's not different. Matter of fact, it's worse. It's going to go down faster. The stock market is going to go down 50%. You're going to lose 50% of the money you have in the stock market. You're going to lose 45% of the equity you have in your home. You're going to lose 30% of the money you have in your savings. Yes, you are. Trust me. Join my gang, Phil's gang, so that we can show you how to benefit, how to profit. But you can't just sit there and own a stock. You got to learn how to short the market. Join my gang. Learn how to short. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. There is only one talk show host, Phil Grande, who delivers both social and financial talk. Not even Hannity or Rush can deliver a 1-2 punch like that. That's Phil Grande, philsgang.com. Phil Grande is unique, the industry leader, the first talk show host ever to combine social issues and finance into winning stock market ideas. That's Phil Grande, philsgang.com. That's philsgang.com. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Lousy data this morning has served to further whittle down an already weak quarter. The CNBC Rapid Update just in the fourth quarter now tracking 0.5%. That's down 0.2 from what the government reported initially in that first GDP read for the fourth quarter. The range 0.5 to 0.7. Everybody's in the same line here. Here's the data that did it. Personal income 0.3%. That was in line with expectations, but consumer spending being unchanged, that was lower. Construction spending up just 0.1%. That was low.
Why are they so surprised? I mean, he sounds so down, like, wow, this is a big surprise. This economy has been bad since 2009. Welcome to Phil's Gang, coast to coast around the country, off the Wall Street Radio Network. We got a lot going on today, not to mention, of course, what's going on in Iowa. I'll let everybody else take care of that. You'll be so sick of that by tomorrow, you'll be pulling your hair out. But let's talk about what affects you, your wallet, your retirement. I mean, he comes on and makes a fourth quarter GDP lower. What, was he expected to go higher? With $22 million pouring out of mutual funds in January alone, he thought it was going to go higher? Are you kidding? What's he think? We're not investing. There's no more investment. Both Bush and Obama, they were focusing on creating fake wealth effects, one in housing, the other in quantitative easing, and Obama with his health care. Nobody was focusing on capital investment. Without capital investment, you have a terrible standard of living. That's why our standard of living is going to hell. So here we have $22 million pouring out of our mutual funds. The GDP, economic growth, the number which we live and die by, how much is our economy growing? What are we producing? What are we selling? Is terrible. From the end of 2014 to the end of 2015, we had an anemic 1.8%, not 2%, and not the 2.4%, the jibber jabber. You heard him on CNBC, the same guy, Leisman. He predicted 2.4%. Came in at 1.8%. That's from the end of 2014 to the end of 2015 that year. 1.8%. That really stinks. So you need at least a 3% GDP to create at least 325,000 jobs every month. But we're at 1.8%. Now, it even got worse in January. The fourth quarter of 2015. Let's break down the fourth quarter. That was for the year. Let's go for the fourth quarter that you always get in the first quarter of 2016. The economic growth for the last quarter of 2015 was estimated to come in 2.4%. It came in 0.7%. And today he just said, well, it's even lower than that. It's 0.5%. Causing this January to be one of the worst starts on record. One of the worst starts. Going all the way back to 1977. This joins the worst start of 1977, 78, 2000, 2008. Those were all the worst starts. This was even worse than the rest of them. Because, again, it would have been, they were lucky on Friday. I'm going to explain what happened on Friday. What's this negative interest rate that gave us this 400-point rally? And by the way, remember they told us that because of the low price of oil, the stock market was going down? But with the low price of oil, we had a 400-point rally on Friday. What's that? They can't keep their story straight. This January, this market sell-off, like the 3-day 1,900-point sell-off in August, is different. This is much different than the August sell-off. This January sell-off is much different. Now, if you go back and look at the August sell-off that we had, the 3-day 1,900-point, same thing. Back then, like now, the four horsemen, Netflix, Amazon, Google, Facebook, those leaders fell off. Apple, Disney, Nike, Starbucks, all these leaders in August caused the market to drop. 1,900 points caused this market to drop in January. So everything's the same there. But where does it get different? Why is there panic? Why is there desperation? Where does it get different? Well, if you remember, in August, and unlike August, this sell-off in January, we had the highest number of short position in 3 years. Remember, after the 3-day sell-off, we had a 12% rally back up. But there's not going to be a repeat of that. Why? Well, because what's different this time is we have the highest number of short position in 3 years. Hedge funds, unlike in August, hedge funds were still borrowing money to buy stocks in August. Companies were still borrowing money to buy their own stocks back, to pump their stocks up in August. So we got that 12% rally right after that 1,900-point drop. But this is not happening this time. So it calls for more drastic measures on Friday. See, there is little hope of repeating this 12% short covering rally. So they got desperate. Who got desperate? Well, who do you think? Aunt B, the White House, the ones who told us that they had to raise rates because the economy was in a nice recovery, thanks to the Democrats and their monetary policies, and as a result of all those policies and how things were doing so well, everything was under control. Remember, she said everything's under control. Let's raise these rates. That's Aunt B. Her timing couldn't have been worse to raise rates. Could have been worse. So what she needed is a short covering rally because we're going into the last day of January. This January was going to be on record as the worst. So she had to do something quickly. She had to do something quick. She had to get a rally going. Well, it was perfect. It was set up perfect because the last day of each month is where the fund managers on that last day do window dressing. Now, is when you get your report for the month of January, what they do on the last day, J.P. Morgan, Goldman Sachs, Citi, all the boys get together and they say, let's all buy Apple, or let's all buy Netflix, or let's buy Facebook, and all of us will buy it, and then we'll push that stock up for the day. And then the next day, we'll sell it, we'll unravel it. But at least when the statements go out, your statements look much better than they really are. So that's called window dressing. It's on the last day of the month. So she knew she had that in her pocket. All she needed was a catalyst to kick that thing going, to kick it up. So she gets together with Draghi of the ECB, European Central Bank, And because Draghi had the same problem we had. They had a terrible January. They both needed to boost their stock markets, to interfere in the sell-off, to interfere in this market crash. So they knew it would be easy to contact Japan and persuade them to a negative rate, which was not hard to do. It was really easy to do because Japan's economy was shrinking by 1.9%. And like us, their capital goods spending was falling off the cliff, a sign they were going into a recession. It was so easy for Draghi and Aunt B to tell Japan, please announce negative rates, that you're going to join Europe, you're going to join Norway, and you're going to join Sweden. And they agreed to do it. No problem at all. Boom. And that's when we had that 400% rally. That 400-point rally. Her timing was perfect. So what does this mean, this negative interest rate? What's it do for us? I'll explain when I get back. Join my gang, philsgang.com. Subscribe.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, my name is Phil Grande at philsgang.com. I'm going to tell you something about your 401k that you don't know. You know the 401k is a tax code? That's what it is. Here's how it worked. In the 80s, you had pension funds, but they decided to give their CEOs a benefit on top of the pension. It was called 401k. That was to shelter their income. That way they could keep the CEOs because it was very competitive. But when all the jobs were shipped overseas, they no longer could keep pension funds. Too expensive. So they shifted all their employees to a 401k, duping you, thinking it was a good deal. But what they did is they charged hidden fees, which amount to about $250 billion a day, that they gave to lobbyists to go to Washington to make sure that this 401k would never be transparent. Here's what came of it.
Responsibility begins and ends with our partners and our shareholders, and that's it.
That's right. So join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You ever notice they always tell you to buy, but they never tell you to sell? They never tell you to sell. Well, I'm going to help you. I'm going to help you understand. When you buy a stock, and if all you do is buy, and you never sell short to make money where they're going down, you have to be so good. That means you got to buy the companies that are always going up. Nobody's that good. Nobody could possibly be that good. You got to make money just like you make money when you buy a stock. You got to make money when a stock goes down. That's how you even the playing field. That's how professionals make money. They make money going up and make money going down. But they don't tell you that. They just want you to try to make money going up. They don't want you to make money going down because they make that money on you. Join my gang, Phil's Gang. Learn how to short stocks at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. What is Phil's Gang? Phil'sGang.com is a subscription website service that host Phil Grande has been teaching and providing daily stock investment recommendations for over 15 years, all in the name of making its customers educated investors and helping the kids at St. Jude's Children's Hospital. If you want to take charge of your financial future, then do not wait any longer. For only $49.95, become a Phil's Gang member today. Go to Phil'sGang.com or call 877-600-GANG. That's 877-600-4264.
Hi, my name is Phil Grande at philsgang.com. You know we're going to have not only a stock market crash in 2016, but a housing crash in 2016. Don't you like how they tell us the housing's in recovery and the market's in recovery and the economy's in recovery? When it's not. It's in a bubble. Take housing. They loaned to a Wall Street firm called Blackstone. $7 billion. They buy 41,000 houses to go rent. Are you nuts? When they can't collect the rents anymore, those houses are going on the market and going to depress the real estate business by 30 or 40%. It's the same thing with stocks. They loan people money 600% more than they ever did before to buy stocks. That's all debt. And when the market goes down, they're going to have to dump those stocks to pay back that debt. And boy, will the market drop. Join my gang. Learn how to short. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything's been taken care of. We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti. Because of you.
There is St. Jude.
We're on our best 2-year job creation streak in 20 years.
What are you, nuts? Who'd believe that? Let me tell you the truth. First of all, the 292,000 jobs we got in December 2015, and they told us the unemployment rate is 5%. Not true. You can't trust these people on Wall Street. You can't trust the press. What they don't count is, in December, for example, the 615,000 discouraged workers. A discouraged worker is a person unemployed, gave up looking for work, but this administration does not count them as unemployed when calculating a 5% unemployment rate. Instead, they classify the discouraged as marginally attached to the labor force, but they're not considered part of the labor force or part of the unemployment. That's why you can't trust what they tell you. If we back into 625,000, the real unemployment rate is 12%, not 5%. That's why you got to join my gang, where you get the truth and where we use charts. Join the gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. Welcome back to Phil's Gang Radio Show. For more information, simply go to philsgang.com. Now, here's Phil.
How much do we play off of China, or is it still about oil?
I think it's more about oil.
About oil. Are you kidding? Welcome back to Phil's Gang. Coast to coast around the country, the Off the Wall Radio Network. Oil, come on. Come on. Look, all that happened is this market has been so bad for so long because it's been artificially pumped up 200%. We know that. So here's what happens. We start the first of the year, January. Now, things are so bad in January because there's no investment going on. You got to have capital investment for companies for the country to grow. If Trump wins, it will begin the much-needed turnaround in business investment, which has been stagnated under two dopes, Bush and Obama. Business investment, there's been very little under Bush and Obama as they focused on creating fake wealth effects, one in housing, the other one doing quantitative easing in the stock market, in Obamacare, but nobody with the two of them has not focused on business investment. But tonight, if he wins, then that could be the beginning of a turnaround in business investment. Business investment is what controls our living standard. If you have a lot of business investment, our living standards go up. But we haven't. And that's why our living standards for the middle class is contracting. IT spending has always been the leader. It's always pulled us out of every recession. Out of the last 11 recessions you check, it's always IT spending. When IT spending begins, you go, good, we're out of this recession, but not this time. So we can blame the slowest recovery out of the past 11 recoveries and this dismal GDP economic growth of 0.7%, revised to 0.5% in this last quarter, 2015, directly on Bush and Obama, their policies. Now, let's go back. Negative rates. So, Aunt B, she panicked. She needed to do something to create a stock market rally, to stop the selling. So, knowing that the last day of the month, the money managers always crank the market up artificially, so to fake you out your 401k, the mutual fund is in your 401k, to make it look better than it is. But she needed a catalyst to get a real rally. And therefore, she went to Japan. Not a problem. Japan, are you kidding? It was so easy to talk them into it. They were going to go in it anyways. Because remember what negative interest rates are. Europe has negative interest rates. Sweden, Denmark. It's desperation. First of all, they use negative interest rates for several things. One, they use it to stop an ongoing market crash like they did on Friday. Negative rates can be used to try to stimulate the economy, just like QE or zero interest rates. But QE never worked because it wasn't supposed to work. It was only supposed to make the rich richer. And Main Street got nothing out of it. And that's what it was designed for. Negative interest rates should reduce, it's sold on the basis that it's going to reduce borrowing costs for your business or for your household. And therefore it should drive demand for loans. Well, they said that with quantitative easing. They said that with 0% interest rates. It didn't do it. They said that with the $850 billion stimulus. It didn't do it. So the last thing they got is this negative interest rate. All she was looking for on Friday was a big rally to get off the bottom, to stop the bleeding. Now, it doesn't work, negative interest rates, because what happens, bank profits eventually get squeezed when you're using negative rates. And when that happens, banks loan out less money. So there's no, even if there was demand, they're not going to give people the money. It's already happening. It's already happening. So you use negative interest rates if all fails. Everything fails. You use that to try to stop the market crash or try to hold your economy together. Now, lower rates. Let's talk about these lower rates. How silly it is. Lower rates. Our economy. They always tell you, well, we're going to lower rates. That's going to create a booming economy. No, it doesn't. Lowering rates in an already weak economy doesn't give you growth. It doesn't boost the economy. That's a myth. It's never worked. The reason they drop the rates in a terrible economy is to help the wealthy. Because the wealthy, they're always investing, they're always making deals. And as long as they can provide cheap money to the wealthy and weak economies, the Treasury can collect more in taxes, more in tax rate. That's why they do it. Think about it this way. If you have a business, the worst thing to ever do when the economy is bad and business is slow, and this is what businesses do all the time, they all of a sudden start doubling their advertising, thinking, I'm going to create business, the economy's terrible, I'm going to double my advertising, I'm going to triple my advertising, I'm going to add on to my business. If I have a restaurant, I'm going to put more tables in. That's the worst thing you do. That's the worst thing you do. You can't create new market share or grab new market share in terrible economies. You grab or you build your market share, you get more market share in good economies. That's when you want to lower interest rates. That's when you start advertising. When things start to turn around and boom, when the economy start booming, that's when you start doubling and tripling your advertising. Because you got people spending money, so you go out and get more of the market share. You capture more of it. Same with banks. When the economy starts to boom, lower interest rates. Because businesses want to expand. They expand in good times. They don't expand in bad times. You can lower. We tried it. We lowered interest rates to zero, and we had no effect on investment decisions. None. Because a smart businessman holds back. He hunkers down. He cuts his overhead. He doesn't expand. If he does, he's going to go broke. He goes broke. So this whole thing about we're going to lower interest rates or give you 0% interest, that's going to turn the economy. It's never worked. It's not supposed to work. It's not supposed to work. We'll talk about some stocks when we get back. We'll look at the stock market.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, my name is Phil Grande, philsgang.com. The 401k big lie. They tell you invest $10,000 a year for 30 years, compounded at 6% annually, you will have a grand total of $245,000 to retire. That is not true. That is not the truth. What they don't tell you is the hidden fees. There's 27 hidden fees in your 401k. When you're all done, you lose half of what you put aside for your retirement. That's right, half. And another thing, you're not allowed to do individual stocks in a mutual fund. And you're not allowed to make money when stocks go down. That's ridiculous. Would you buy a car with just forward and no reverse? Why would you ever be in a fund that you can't make money when the stock market goes down? Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. Listen to what Fisher said, the former Fed governor.
We front-loaded at the Federal Reserve an enormous rally in order to accomplish a wealth effect.
That's right. Did you hear that? They took the stock market, front-loaded it, ran it 200%, so we ended up not only with a fake stock market, but fake GDP, fake money, fake jobs, fake prices, fake everything. But we took advantage of that, and we're going to take advantage again. That's why I told my gang in May to short the market. On 5/29, that's May 29th, I'm telling you to short the stock market. And we were right. And the market went down over 11%. That's why you got to join my gang and learn how to short stocks just as much as buying them. Learn how to short with me, Phil Grande at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. Listen to what Fisher said, the former Fed governor.
We front-loaded at the Federal Reserve an enormous rally in order to accomplish a wealth effect.
That's right. Did you hear that? They took the stock market, front-loaded it, ran it 200%, so we ended up not only with a fake stock market, but fake GDP, fake money, fake jobs, fake prices, fake everything. But we took advantage of that, and we're going to take advantage again. That's why I told my gang in May to short the market. On 5/29, that's May 29th, I'm telling you to short the stock market. And we were right. And the market went down over 11%. That's why you got to join my gang and learn how to short stocks just as much as buying them. Learn how to short with me, Phil Grande at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, my name is Phil Grande, philsgang.com. You know, every day we read in the paper or we hear on radio or TV how the market is rigged. So what? It's rigged to go up, not to go down. You know this market hasn't pulled back 10%, not 10% since 2011, and you're not in this market. You want the market to be rigged. All you got to know is when to get out before it blows up. That's why you become a gang member, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, it's been 7 years now since Obama ordered his Fed chairman to lower the savings rate from 5% to less than 0.25%. With a false narrative, it would spur economic growth and jobs. Everyone would have an opportunity in this economy. That's what he said. But what it spurred was a front-loading of the biggest, fake, unsustainable stock market rally of 200%. That's what it spurred. Now, most people did not participate in that rally because people got out of their 401k in 2009. And they said, just get me out. I want nothing but fixed income. And they got killed because with low interest rates, fixed incomes get murdered. You got to know what you're doing. If you're going to really retire, you got to be associated with the stock market. That's why you come to philsgang.com. That's philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. You know, it used to be, hey, what's that hot stock? There's no hot stocks anymore. You know what it's all about now? It's identifying when to get in the market, when to get out. And why? Because the market is rigged. It's rigged to go up. There's nothing better. It's rigged to go up. It's called quantitative easing. Join my gang, philsgang.com. Have fun with us in a rigged market.
Go to philsgang.com or give us a call at 877-600-4264. Welcome back to Phil's Gang Radio Show. For more information, simply go to philsgang.com. Now, here's Phil.
Stock Corner is brought to you by the Phil's Gang video channel. Go to philsgang.com, click on the video channel graphic, and check out Phil's free videos on the market, economy, and current events.
And welcome back to Phil's Gang. Tonight, I'm going to have a brand new video for you. You can go check it out on the homepage. I'm going to put up the difference. I'm going to show you. I can put up my chart. I'm going to show you the difference between the drop we had in the market in August and the drop we had in January 2016, and why in August we're able to get a 12% rally back up, and why we can't get a 12% rally back up in January this month, or February now. Why couldn't we get the 12% like we got in August? I'm going to explain it to you. And also, let's take a look at some stocks. You know, I always tell you the comfort level is to be able to buy stocks as well as sell stocks. As a matter of fact, I asked my gang this morning, when the market was down 150 points, if they're going to drive this market today, they're going to drive it positive. When it was down 150 points, ask them. I said it was going to turn positive, so let me work with you on the basis this market's going to turn positive, and it did. It's now up 40 points from where it was down 150 points. So I'm going to explain the whole market to you, what's going on, what's with this negative interest rate. It's going to be on my video. It's going to be a great help to you. Now, I wanted you to know when we have a market like this, it doesn't matter. This is wonderful. Before this, we've been going sideways for 9 months. Remember? We were going sideways for 9 months. Now with these drops like this and going back up, this is a beautiful thing. You have volatility. This is where you start growing your wealth. This is where you start putting wealth away for your retirement. This is called volatility. It's a wonderful thing. Now, let's take, and if you're, and all you got to do to create wealth is understand that stocks go up 70% of the time. Remember that. 70% of the time. You don't even get that in Vegas, those kind of ads, but 70% of the time. But today, because of the drop we had in January, it's going to be reduced for the rest of this year to 58%. But let's just think of that 70% of the time. That's not hard, is it? Not hard at all. If it's 70% of the time on average for the last 150 years, the stock market goes up, what's so difficult? The difficulty is you get clouded with listening to these guys on CNBC and these other financial shows. You let them take parking space in your head. You think you need a money manager. You think you need to hand your money over to them because they know all this stuff. It's not true. So let's take Walmart. Walmart is one of our stocks. And Walmart, we did very well with Walmart. Now, Walmart, we did on Walmart, I think it was, we decided to go, we went long on Walmart. Just trying to find my notes here. Here we go. On December 14th. December 14th. We had a buy signal. We didn't have to know anything about Walmart other than we had a buy signal, meaning the institutions that own most of that stock, JP Morgan, Goldman Sachs, they were buying the stock. So we saw them buying it, so we bought it. So we bought Walmart at $61.54 on December 14th. Today, we now have about a, I think it's about a, what would you say, 14%? 14% gain. 14% gain. Now, we're long Walmart with a 14% gain. Let me just check that number again. We'll make sure. Go $61 to 68. Just round it off for quick. 61 to 68. 10.5%. 10.5%. I thought that was a little too high. So let's say 10% return. What is wrong with that? A nice 10% return. But here's the beautiful thing. You know you can go to bed tonight and you're not going to worry about giving that money back. You're not going to give that money back. First of all, we're going to be taking a lot of our profits today because we're at phase 3 of a stock. A stock has 4 phases it goes through. When you get to phase 3, that means to take at least half, if not more, of your money, your profits. That's Walmart. Now, on the other side, Ford. I told you that the automobile industry was going to collapse, and it's starting to collapse. The crack is starting. All these subprime loans. So I said to my gang, I said, let's short Ford as soon as we see the institutions pulling money out. And we did. On November 10th, we saw Ford, money coming out of Ford. And right now, Ford, we have about a 15% return on Ford. Shorting. So Ford, we got 15% going down. Walmart, we got 10% going. So let's say we got 10% on both. One going up and one going down. See, that's the key to convince you that you got to understand how to make money both sides. To try to say that you're going to retire using something in the stock market like a 401k mutual fund that you only can buy stocks is ridiculous. It's not going to happen. It will not happen. Now, the impact of fees are so understated. It's incredible. A 2% fee wipes out 63% of the money that you've made. 63%, 2% fee, 2%. So if 2% is going to take 63% away from you, and you only are going to make money when stocks go up, you can't make money when stocks go down. You just got to sit back and call your broker, your planner, your manager, and keep asking, what do you think we should do? And his job is to hold your hand. That's his big job. Hold your hand, make you feel good. Let's stop that. This is a new year. Let's stop that. So why don't you subscribe to my site, philsgang.com, or call right now, 877-600-GANG. That's 877-600-GANG. Denise is there. Take your phone call right now. Steve will take your call. Subscribe. Try it for a month and see if I can make a difference in your life. And if I can, please donate to St. Jude. Donate to St. Jude. No child is ever denied treatment because they don't have the ability to pay. 81 cents of every dollar that you donate goes to support research and treatment at St. Jude. And every day we need $1.7 million to keep the doors open. So it's a pretty good deal. So if I work with you, you work with them. Now tonight I'm going to have a video up, as I say, and it's going to be a wonderful video explaining what happened here on Friday and what's going to happen in the future. So there's your Ford. We're doing very well with Ford, and we're doing very well with Walmart. Now, under the leadership of these two dopes, Bush and Obama, we are in this mess we're in. They were too interested in creating fake wealth effects. One through housing, one through QE, and this other Obamacare. They did not focus on investment. And it's investment that we have to focus on. And that's going to happen if Trump becomes president. He understands investment. You got a businessman here. Hate him or not, that's what you're going to like. Because he's going to focus on investment. Industries, especially investments in industries such as computers, chemical products, these kind of industries have really gotten screwed. The amount of investment in these industries had declined so severely, the capital investment, it is terrible. It's resulted in the steepest declines in the middle class standard of living. Remember, when you don't have capital investment, you don't have productivity. When you don't have productivity, you can't keep your standard of living up. So two of the biggest areas of investment, we have just turned our back. Computers and chemical products. We have industries that we turned our back on that once powered U.S. investment growth and how competitive we were all over the world. The wheels have come off. Machinery, computers, communication equipment orders all fell to 2001 levels. That means we are in a recession. That's how Aunt B talked Japan into going to negative rates, because they had a GDP of 1.9%, and their orders are just as bad as ours in machinery and communication equipment. So they said, no, hey, we're with you. And that's how they created this fake 400-point rally. We'll be right back. More on stocks in a moment. 43 past the hour on Phil's Gang. Subscribe now.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grande at philsgang.com. Everybody was asking me, how did I know to short Ford when it was November? And it was when Aunt B was telling us everything was fine. Well, what people didn't know is Aunt B was lying to us, because when she was raising the rates, machinery sales were down 5.6%, computers were down 8.7%, communication equipment sales down 21%. I took a look at our chart and I saw that institutions were pulling money out of Ford. So we said, let's short Ford. And we did that in November, on November 10th, because my charts told me there was a big sell signal, and we took advantage of it. And you know that stock Ford has now dropped 17%. That's the return my gang has now, 17%. Don't follow any of the jibber jabber from CNBC or the Fed. Follow me, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. I'm here to help you. I'm tired, and you should be tired, of listening to these financial shows like CNBC where they're all geniuses and they're always wrong. Look, stop worrying about the price to book and the price to sales and all the stuff they tell you think you need to know. You don't need to know any of that. Anybody can make money in the stock market using charts. It's about money flow. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
They just told us right away that we're going to house you, we're going to feed you, and every single one of his medical bills is just all taken care of.
Saber que el tratamiento es completamente gratis nos quita una preocupación de encima.
We have phenomenal research, outstanding clinical care, and the generosity of public, which allow us to treat patients regardless of what it takes. And that's what makes St. Jude so magical.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food, because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything's been taken care of. We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
Hi, I'm Phil Grande at philsgang.com. You know, many people left the stock market after the crash, and here's why.
Responsibility begins and ends with our partners and our shareholders, and that's it.
And that's still going on. That's your planner. They don't represent you. They represent themselves, your money manager. But you have to make a change. You can't change them. You make the change. Join my gang, philsgang.com, so that we can take care of you. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. We're hitting a new year, and you should, at the same time, come in with a new attitude, a new philosophy that you're going to make money when the stock market goes down. That's right. This is the third bubble, and you don't think it's going to crash? The first bubble did. The dot-com, the second bubble, the housing and financial con. Why do you think the third bubble, which is twice as big as the two previous bubbles, is any different? It's not different. Matter of fact, it's worse. It's going to go down faster. The stock market is going to go down 50%. You're going to lose 50% of the money you have in the stock market. You're going to lose 45% of the equity you have in your home. You're going to lose 30% of the money you have in your savings. Yes, you are. Trust me. Join my gang, Phil's gang, so that we can show you how to benefit, how to profit. But you can't just sit there and own a stock. You got to learn how to short the market. Join my gang. Learn how to short. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. Welcome back to the Phil's Gang Show. This segment is brought to you by philsgang.com.
And welcome back to Phil's Gang. Remember to subscribe to my site, 877-600-GANG, 877-600-GANG, and Steve is there right now, and Denise, and they'll help you with your subscription. Try it just for a month. See if I make a difference in your life. Now, these numbers I'm giving you are true. You can check them out. You're a gang member. You can check them. Now, I gave you our Walmart, and I gave you our short on Ford. When it told us the institutions were pulling money out of Ford, we sold short, and we got, well, I'll just use 10%. 10% return was more than that, but I'll use 10% because you won't believe it. So November 10th, we shorted it, 10% return, and then we bought Walmart to go the other way because we saw money going in and a 10% going up. Goldman Sachs in November, we saw money coming out. We said sell it short. It's an 18% return by selling short, meaning you're making money as it goes down. And same thing with Caterpillar. We sold it short on October 27th, and it's a 12% return. You got to learn how to sell short. Because even though the market 70% of the time it goes up, that 30%, when it drops 10 times faster than it goes up. And here's what really gets me with what's going on, why this economy is so bad. And tonight I'm going to put a video up, and I'm going to show you the 3-day sell-off in August against the January sell-off. And I'm going to show you how easy it was for them to get a 12% rally off that bottom on the sell-off in August, but now how they're struggling to try to get 12%. And if you want that return, if we're going to go that way, you want that return, join my gang. And you can be with us, and we will catch that return, that 12% on the way up. If it fails and goes back down and makes new lows, I just gave you what we made on our short positions. We'll just simply short it. Try it. It's not hard, and you're going to feel good because you haven't got to do anything. You haven't got to do anything. So check it out. It's easy, especially if you're so passive, you're working, you're busy. Check it out. Now, here's the problem. When Yellen, Aunt B, went and raised rates, she couldn't have done it at a worse time. She couldn't have done it at a worse time. Can you imagine? And think about it. She raises rates. She's already weakening a decelerating, terrible economy when she did it. By raising rates, she raises the dollar higher. The dollar goes up. Are you kidding? That drives commodity prices lower. It weakens exports. That means we're going to have a deficit, which means it's going to cost more jobs. And because it cuts into profits of these multinational corporations when the dollar goes up. So to have taken and raised rates that pushed this dollar up, that's weakened exports, that's going to cut profits, cut jobs, is stupid. She did it to save face. Now she's in trouble. Especially when you see how terrible our economy is. We're not growing. We're not growing. Terrible. So, not only has our overall business investment stagnated under Bush and Obama, but these investments that we once put in industries across the board, especially our important ones, chemicals, computers, the declines in those industries, the capital is terrible. So here we got two misguided dopes. As a result of these two dopes, the wheels are coming off our economy. These industries that have all the high-paying jobs that powered our investment and our investment growth and empowered our global competitiveness, no more. There's no more investment that going into these companies, the important ones. Especially the industries in which everybody thought in the world, boy, the United States are the global leaders in these industries. No more. Not with the declines we had in capital investment. We're too busy worried about, hey, go buy a car. Go buy a car. Go buy a house. Hey, here's 0% interest rates. Here's quantitative easing. The 1 percentile. Go and make a fortune on stocks while Main Street suffer. So what did they do? So they focused on helping the CEOs of companies in the 1 percentile. They aided them, and what they decided is to favor short-term gains, these companies, they said this company, here's this money at zero rates. Why don't you focus on short-term gains, they said to the CEOs. Ship all the jobs to China, to other countries, so that when it comes back as profits, it will go in your pocket and the shareholders. And don't put any money back into the company. Don't do any investment. Do no IT spending, nothing. But we're going to give you the 0% interest rates to help you so you focus on short-term gains. Isn't this amazing? See, they never understood. Bush has always been a loser. Every business he got involved with, oil, everything, he lost. His father had to go bail him out. Obama's another loser. The two of them never understood what innovation was. The power of innovation. They never understood long-run economic growth. They never understood what once you have innovation, capital investment, the purchase of machinery and equipment and software by companies, that just spreads. It spreads the innovation throughout the economy. It creates jobs. These two dopes never figured that out, never understood what innovation was, the power of innovation. They never understood that. Or if they did, they didn't care about it. They wanted short-term gains. I mean, they never understood the innovation. Like, think about the innovation through I don't know, IT spending, information processing equipment, and software, industrial equipment, engines, metalworking machinery, materials, transportation equipment, trucks, aircraft. Just think of all the stuff that you can improve, and it's involved with improving innovation. And that means you improve jobs and you improve your standard of living. They didn't do it. They never understood modern economies. They never understood modern economies like the United States. They never understood that modern economies like the United States require innovation in order to grow. They never understood that. Capital investment is innovation. Example, how about new personal computers? Contain better and faster operating systems. And all these new redesigns of software, they include hardware innovations such as touchscreens and solid-state drives and that lower boot time. I mean, how many times you want to boot your computer? And you sit there and you wait. Innovation now takes the boot time, boom, in seconds. See, they never understood any of this. Or if they did, they didn't care. They didn't care. So the market now is going to be is controlled by these people called the Federal Reserve. They move it up when they want it to go up. They move it down when they want it to go down. So here's what we're going to do. We're going to do what we've been doing for 15 years. We don't care. We don't care about the Fed policies. We don't care about what the Congress does. All I care about is one thing. When I get up in the morning and I look and I see the S&P is down 100 points or up 100 points. All I care about is taking the same 5 stocks that I work every day for my gang. Every day I work the same 5 stocks. I'm going to make sure they're doing well with those 5 stocks. I'm going to make sure every day Goldman Sachs, Intel, IBM, Caterpillar, and Schlumberger, that every day I'm going to be on top of those stocks for them. I'm going to make sure that we're out in front. We identify early on which direction these stocks are going to go. We're going to take profits when we should. And here's the important one. We're going to short when we should. We're going to short just as easily as when we go long. And we don't care. If our presidents don't care about innovation, well, you know what? We don't care either. Join my gang right now. Subscribe. Call 877-600-GANG. And Denise will talk with you, and so will Steve. We'll see you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to make my dreams.
Hi, my name is